No one really knows how the future is going to pan out. But if we're building new wealth for the new world, we need to understand what that new world looks like. So, if there is a debt crisis, will it be triggered by current geopolitical events? Are we about to witness the reorder of the current financial system like Bretton Woods? And will gold once again become the new cornerstone of some sort of system in the future? Even from a non-doomer perspective, housing, the banking system, and the Western way of life appears to face rather severe disruption amid a new form of mercantilism and a shift of power to the east. What should everyday people like you, like me, what should we do to prepare? Francis Hunt is a financial analyst and the founder of the Market Sniper, renowned for his macro technical approach to markets. Today, we're primarily talking about the debt-based crisis that he sees coming and how everyday people can prepare. Hope you enjoy. If you like learning about new ways to build new wealth for the new world, then make sure that you've subscribed to this one. And if you like it, like this video, share a comment as well. Let me know what you think. We're going to some pretty crazy places today in this conversation, so hope you enjoy. Welcome, everybody, to the Everyday Investor Podcast. Today, I'm with the one and the only market sniper, Francis Hunt. How are you, Francis?
Delighted to be with you, Darcy. Thank you for the invitation.
Cool. And this is your first time on the show. So before we get stuck into it, why don't you just give us the lowdown on who you are, what is it that you do?
Yes, thank you for the opportunity to do that. In fact, I mean, I was just saying to you prior, everybody thinks they've got a clever logo, but we kind of enspouse it in our three circles in our logo. We have the reset sniper, which starts with actually not everything about this is all about an accident. Of bad decisions and incompetence. That's our take. We find there's real justifications that there's real planning going on for a far more draconian, digitalized system for the average people. So there's certain people that are born to rule and people who are born to be serfs. And apparently we're the serfs. So that's the reset sniper that follows. Where do they want to take us? So Stephen Covey was very proficient in saying, begin with the end in mind for understanding the journey path. If you want to become something, that's the end in mind. How do I become a brain surgeon? Well, I've certainly got to do biology at school, for example. So with the understanding of the macro financial system, where do they want to take us so that we can name check each of the individual steps? So we certainly have that, but there's a lot of people who from tin pot conspiracy theorists to people like us who may well fall in that category as well, and analysts. So we analyze on that. But then there's the other two elements that we bring in. The crypto sniper is part of understanding this new financialization, which goes hand in hand with the current financialization in a state of repression and eventual collapse. So they're already bringing the parallel running and bringing the new system into place, which will be a digitalized financial system. So that's the crypto sniper. And then the market sniper actually is where we house one of our things that is very unique that no one else does. And that's the HVF method, which is self-derived. And it's the Hunt Volatility Funnel method. And that's where we follow and actually see the trades in the market before they break. And that's utilizing a bespoke developed technical analysis as trading methodology, which has seen us, by the way, call single digit oil a year, 6 months, and repeat on various stages. You mentioned you're in Mexico. In fact, in Acapulco in February was the last stage appearance that we said you'd get, in all likelihood, on balance of probability, single digit oil, when oil was in the 70s and it hadn't happened in 35 years. That was a precursor, of course, to the CV19. We were also amazingly short cruise liner companies, which didn't make sense to us at the time. But we just take the trade because we are technically driven. I consider us the macro technical analysts generally, apart from HVF method. I'm very disappointed, in fact, that we appeared to be the only people in 2020, the back tail end of 2020. So you don't even have to be good, you just have to show up as macro technical analysts that said that the debt markets have now finished its 40-year bull market with a blow-off in valuation and a capitulation in rates. It's quite simple from charts, if you really understand charting. So we actually put the chart, our opinions follow the chart. In other words, I'm in Africa right now. It's great talking to a New Zealander. We were mentioning there's a big rugby match in Eden Park coming up. It's exciting. Hello to all of the New Zealand people, by the way, and all those others that follow your show. We track like the Bushmen did in these mountains behind me. I'm in Cape Town at the moment, and we don't doubt what we see. And we will make crazy calls based on technical analysis. Most people are narrative followers. And that often is disguised as fundamentals, but sometimes I call them funny mentals because you're getting bad data, you're getting active deception in data. I consider the non-farm payrolls in the US as part of that, and that's why we prefer charting. I'll trust the bushman about what animal it is whose footprint's in the sand, whether it's injured and waiting behind a bush to charge me or not, rather than a lab scientist. And that's kind of where we are. It's time actually for guts. I don't even know if we can rely on data. So we've done particularly well for our own trading, and our core emphasis and the value I want to give you as part of this opening speech, I suppose, is to help people build wealth in reset times, to help people preserve that wealth that they do build and to continue building. And then finally, to secure freedoms in what I see as a very draconian world that is coming, optionality and freedoms. And that's the market sniper game.
Thanks, Francis. And I think that this is good because like there's different manifestations of it depending on the conversation I have with people. But what I'm all about is how do I help everyday people build new wealth for the new world? And I think a lot of that just means hanging on to wealth to get to the new world, right? And there is a bit of a journey there. And so that's kind of what I want to unpack. And it's a difficult conversation to have without sounding like full-blooded doomer. And so maybe if we could just start at a high level, you mentioned the debt-based system already, but if we think about the last 40 years, I've often wondered, is this a reversal in that long-term trend of declining interest rates? Is it a blip? Is it a collapse? I don't know what's going on, but can you just give us a broad overview of the debt-based financial system, where it came from, and more importantly, I guess, where we're at right now?
Most people's understanding of money is incorrect. Money is borrowed into existence. When you purchase a property with a mortgage, you're not using somebody else's savings, and the money is just being repurposed. In actual fact, banks are creating new money. So that's an expanding liquidity. And with it, they create an asset, a mortgage, which is essentially a contract whereby they hold your property as collateral and they receive an interest payment from you as well as a capital payment, and in most instances at least. And that is an asset. They can sell that asset on for someone else to receive the inflow. So finances are typically based on a net present value of future payments determines a certain valuation. A couple of things vary that determination. If interest rates rise, that value actually shrinks because the expectation is or inflation, interest rates, that money is actually devaluing at a higher rate. So that's why they have to charge a higher interest rate if, for example, the inflation environment is high. So for the New Zealanders that are watching, I'm deeply concerned for the Australasia property market that didn't really dip as much in 2008. And I know everybody, particularly there's a patriotism, there's a nationalism that comes on. Oh, it's different for us. You know, we're a small island, New Zealanders may say. Australians will battle with that one a little bit more, but they'll say, well, you know, we don't have habitable land on the same level. There's a big old desert in between the two coastlines. So they might make their own version thereof that it's different for them. Actually, property prices, as a warning shot for your audience, are maths, are a function basically of maths. A couple of other things like demographics. For example, America has the boomer demographic. It's a very awkward one because they have a lot of homes. The average age purchaser right now is 57. It used to be 31. So that tells you about affordability. They're at maximum unaffordability, more so than the pre-08 crisis, more so than 07 at the moment. That's a function of interest rates. It's also a function of banks' reduced willingness to lend. So when you lend, you're originating an asset that is a loan that you own. as well as giving someone else some new money to buy that home. Those assets are no longer highly valued anymore because the debt market has turned. So being able to sell a loan book is a lot harder to do now since the turn in the bond market of 2020. That's why we keep saying that's our most important call we've ever made. That the 40-year bond market. It was our first time to make that call, and it is the most important one. Why? Because it's the beginning of a debt-based collapse. How everyone goes often when they think of central banks, but the central banks will save the day, they'll just print. And
Mm.
I need to address these typical answers because people
Yeah,
that
please.
are sitting in homes saying, oh, this is just another guy that's, I've heard people doomer on the property market in Australia, New Zealand many times before. We've learned over the last 30 years, property only goes up, da, 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 da. There'll be all of this. No, it's mathematics. And this time is different. 99, 87, I can even start there. Greenspan just dropped interest rates. We reflated the stock market collapse that was then, no problem. 99 into 2000. By the way, I wasn't saying planes were going to fall out of the sky. I'm not naturally a doomer. I'm a very positive guy living a positive life. Again, they reflated with interest rates cuts. America had a bit of a recession in 2000 for 01, 02. It threw out for George Sr., who had to up tax rates when he said he wouldn't, read my lips. Then in 2007-8, into the GFC, we went into quantitative easing. This was a far more serious crisis. Again, New Zealand, Australia, not as badly affected, but to some degree. What happened is we did QE1, we didn't do enough. QE2, QE3, we limped our way out of that over an entire decade. And that's the lesson they learned for when 2020 occurred. So instead of doing 150 billion, 200 billion in quantitative easing, they went straight to the big numbers, and they also paid a small percentage of it, to the end consumer, because you don't really get a recovery until consumers start spending again, and they get a little bit better. So after shutting down everybody's businesses, they then paid small businesses some money, stipends. They paid furloughs to people that had not been allowed to open the restaurants, etc. And they got a V-shaped recovery, but they broke the debt funding market. So what's actually happened now is people say there's so much more debt that we no longer see it in the same eyes. It's no longer a pristine collateral. We'd in fact rather own gold than debt, and we've seen a substitution for gold versus debt. And we've seen the reserve banks and the central banks being part and parcel of that group that are doing that. And America's interest rate payment is now 25% of its income, that is its tax revenues. So what you effectively have is you have a very, very, very bankrupt nation with an ever escalating rate. And people say, but they've survived. People have been calling this crash on America for decades. Yes, we've been saying it will come, but we never said it's coming soon. Now we're saying it's getting far closer. It's getting far, far closer because the sustainability is now impossible. And for those that think that you were going to get frugality and austerity and they would fix this, they started that tone to get Trump elected and Elon, and very quickly they've pivoted to the big, beautiful bill, which is a raising of the cap ceiling by 5 trillion, plus $1 trillion in military industrial complex spending, which is where the hyenas feast, politicians, arms dealers, and other hyenas. That is basically an inner cartel that get exceedingly rich off you, hyper expensive, incredible margins, lots of intermediaries, usually politicians, family members, dark states operatives, and a lot of other people. And those people get wealthy at the cost of the many. So the key point is, when a government overspends to its income, that's its tax revenue typically, and its customs duty and anything else it gets in as income, it is inherently inflationary, because what it means is they're creating a debt instrument that they have to pay interest to someone else on. That is an expansionary monetary policy. It's inflationary. It is a tax on the citizens of New Zealand, Australia, and the world, because we have a synchronized leper colony where there is no sound money. And this is why this points to orchestration, to me. Hence my reset. When you understand where they are taking you, you are being taken into a collapse, because that will provide the opportunity for a more draconian digital system. So I gave you probably more than you asked for in that. So I'll let you unpack and drill down where
Good.
you choose.
I don't even know where to start. There's so much here. I've got all these ideas going on in my head, but I guess the one that I'm interested in is just understanding the picture of what this debt-based system looks like, because to me it kind of feels like it is properly a pyramid scheme where the success of it depends on the endless increasing creation of new credit as time goes on. Because if you lend money into existence, then if that's to be repaid with interest, then where does that interest come from? More credit needs to beget more credit, right? So is that kind of what you're talking about when you allude to a debt-based collapse? Is that when the system just gets just too heavy and it breaks because you can't do it beyond a
Correct.
certain point?
We did a very basic diagram, which I called the convexity curve of credibility for the reserve asset in T-bills. And it's essentially it looks a bit like a mortgage repayment schedule. You probably know, if you pay a
Yeah.
house, you buy a house, and you pay interest rates, you're not eating much of the capital very much. And then as more and more of the payment goes towards, you eventually get quite a steep descent near the end. But in the beginning, it loses, you're eating into capital very slowly. If you think about that as a credibility of reserve assets for debt instruments instead, on this vertical, and then time along the bottom, you have, initially it starts at 100%, but you start to lose the credibility of it as a reserve asset. But it's very, very slow and very, very minor. And it's like frog boiling. The temperature is barely changing. Everybody keeps hanging out in the jacuzzi. It's getting a little bit hotter, but the bubbles are still there. Everybody's still happy. The girls are still in their bikinis. But then as you get deeper into the cycle on the scaling up of debt, you eventually get to the situation where the interest payments start to become so material that they're eating into short and medium term cash flows. This is where we are now. And what tends to happen is that's the steepening. It's like a quickening. And
Mm,
there's a couple of parallels I always use. Ernest Hemingway's response to bankruptcy was, well, it came slowly at first and then suddenly very fast. That is the verbal description of the curve I am giving you. And we're in the quickening phase. Which is a spiller. It's an absolute thriller all the way from Manila, as I like to say, because you're on the slippery slate that is wet, and it's now getting steeper. You weren't able to reverse it when it was a gradual decline. Now it's turning, and eventually it goes near vertical. And that is the debasement of debt, because it will become so over proliferated, so undesirable. But remember, scarcity is one of the drivers behind gold being a reserve asset. You just don't, not every rock is a chunk of gold. And then even more so for something like platinum, which we've been exceedingly bullish, and in fairness to silver, considering its price as well. So what we're seeing is the loss of a reserve asset. Now, you're saying that's a terrible story you're telling me. Maybe you just like big drama headlines and you're trying to scare everybody. And I get this a little bit. No, if something's serious, we just say it's very, very serious. The good news is gold and precious metals generally, and other aspects that have real scarcity and have a true proof of work, digging a hole deep in the ground. We've got 2 miles depth mines here in Africa, by the way. That's a lot of earth that has to be in rock, that has to be dug up really far down with a lot of effort and a lot of energy. So the cost obviously gets high. The precious metals response is the exact mirroring opposite of that curve. So you get your mortgage payment convexity for the credibility and value of debt on the vertical. It's turning into a spiller, the thriller I was telling you about. And the opposite is gold is working along the bottom. And the more it gets quicker in the loss value of debt, you have a parabola coming out. So you get the hockey stick graph, which is the mirror opposite of the one I'm showing you
gotcha.
doing that. That is just called the base market. It's just reflecting back the loss of fiat and debt. And you've got to think of fiat and debt simultaneously. If you think USD, you should go US dollar stroke UST. So when you had a 52% devaluation in the TLT, which is an ETF for long dated debt, 20-year, 30-year, etc., which we called, and we pointed out September 2020, this is the beginning of a change in trend. We spoke of a 40-year escalator, how it's been slowly up, and it's brutal down. You've lost 55 at its worst, but around 52% now of value. You then get a commiserate loss of value in the fiat. And because America, in truth, had such a harsh debt revaluation, you're actually also seeing the dollar be an underperformer. So you get, it's like left foot, right foot. When you're walking in the road of devaluation, debt devalues, currency devalues. Debt
Right.
devalues, currency devalues, debt devalues, currency devalues, sprint, 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 until they are almost simultaneous. So when you're in the skidding falling point, you get both the debt and currency devaluation, and that's the point of highest disorder. Everybody will be knowing and noticing that, and you will have pricing going up on weekly and monthly basis instead of real changes. I'm talking like 5% plus on core goods that are typically commoditized, bread, milk, etc., etc. This will be, and they'll say, oh, but there's been, there was a flood and we didn't get wheat and all of this nonsense. This is all about currency debasement, and you're going
Right.
to get the accelerating phase, and that ties in with another economic typically question is you have decades when nothing happens, and then you have weeks when decades happen. And these sayings go hand in hand with the kind of events of Weimar Republic, which we're going to be going through a globalized version.
Okay.
The biggest thing, and I'm just going to bolt this on before handing back to you because, again, it's a long form answer, but the biggest cope I see is the US citizens, the general mid-tier advisory guys that are on YouTube. I don't want to mention names. They go, well, China's property market is wrecked. Europe is a mess, and all of this. The problem is for America is hegemons, the dollar-based currency, are on the tallest ladder. They fall hardest. They fall from higher up. Yes, there are inherently, Europe is a mess. Yes, China did do a property boom and bust, but China produces, builds infrastructure, not wars, and actually produces more than it consumes and stacks precious metals with the residual. What you have out of America is consuming almost double what its income is and needs to put on a credit card called the Treasury Bill Funding Mechanism, which is both a dollar and a debt instrument. Please buy our assets. We're a net exporter of IOUs at a time that IOUs are now being found out and no longer desired. So what's going
Yeah.
to happen is you're going to have to witness America reduce its own personal consumption, because it's been a consumer for the world with this exorbitant, to the point where it's close to a balance. And Deutsche Bank has said to get a trade deficit to zero, in other words, the exports and the imports are roughly the same, you would need a 40% devaluation in the dollar. That's not my take, that's Deutsche Bank. Goldman Sachs more recently said in a more moderated term, its sense is that the dollar is 15% overvalued. So the minute you're losing hegemon status, and that is what is happening to the US, you get this need to suddenly only spend what you get in. And for Americans, that is unbelievable reduction, because you're actually earning 100 grand and living the life of a guy who probably is on 300 grand, paying a bit of tax and spending 200 grand, because you're about 50% on income to what you truly expend. And that is a brutal, brutal re-rating. And I expect the renege on the social contract, the welfare, the Medicaid, everything, they're going to have to be renegotiated, they're going to be reneged upon, or they do immense amount of debasement of the value. So you think you're going to be getting $5,000, let's say a month, in pension, Medicaid services. You will, but that dollar will buy what 1,000 buys today. And I think that's how they're going to pass that on. So this is a real fiat-based collapse. Remember, markets overreact to the downside before they finally correct towards a mean. So the potential for an incredible capitulation is indeed there for the US, because The appetite for the debt instruments as an asset is now gone. It's seen as a 40-year lifespan as an asset is now over. You need a Volcker moment. And of course, you can't take the interest rates to the levels he had because it's not the same environment. You're far more indebted. So that's a little bit extra for you on why the hegemon falls hardest. But just be aware that the ability of banks to originate debt will affect all nations, and the desirability of the debt instruments generally, not just American ones, are going to be called into question. So we're going to have a super blow off in precious metals and correct reserve assets. And that's going to be very dark on housing, because if banks don't want to lend, they're going to increase underwriting standards, ask for bigger deposits, and charge higher rates, and margins will have to be fatter because everyone's expecting debt-based collapse, greater unemployment, and when we globalized, you get a bigger pizza pie. So global trade and opening trade increases the pie. You don't even have to increase your percentage slice, you get bigger. When you do the bifurcation and contraction, that is the world of tariffs, you actually reducing the pizza pie, and everyone's competing now for a bigger slice. So there's going to be a contractionary global economic environment. The Fed predicted 1.4% GDP and is predicting 3% inflation. So that is already stagflation prediction. They are predicting stagflation. Let me let you come back at
Yeah.
me on
Okay.
that.
So yeah, there's a couple things just to unpack a little bit. So you're kind of alluding to this, I guess, when you were talking about this before, this amortizing credibility, right? Or nothing stops this train. This sense that you're entering in this parabolic phase where little by little, then all at once. But most people wouldn't necessarily share this view, and that's probably why you would get tarnished with the brand of doomer occasionally. I'm sure, right? Because this is kind of like most people are like very comfortably numb with their heads in their sand, and for most people that's actually probably a pretty good place to be honest, because this can shock a lot of people, right? But if we went down the rabbit hole far enough, you can help the right people, I guess, pull their heads out of the sand, right? But with what we're talking about here, to me it feels like like I know what you're talking about, but it feels very fringe, but not so much lately. Is this a view that's starting to become more mainstream, or is it just because I'm talking to people on the podcast that are crazy like you, Francis? What do you think?
um, well, your first reference were to the average man in the street. There's a concept of hypernormalization, where every day is just like the day before. So when you're watching the continuous stream, it's almost like a Mandela effect. You barely see anything change on a day-to-day basis. If you take a snapshot from a certain time period, you don't watch a stream, and then you take a snapshot from today and you look at the numbers, you go, wow, how have we
Yeah.
got here to be in such a state? And everybody goes, no, it doesn't matter. Just, every day is like the next. That's the continuous stream. It's a hypernormalization. It's actually
Right.
a mass psychosis to be in hypernormalization. I'm in the normal mindset because I actually see things to manner. That's certainly the framing from my perspective. You saw this happen with CV19 as well. Nobody predicted that you would have such a collapse in oil and that it would be driven by anything like that. And you saw what happened, and you saw the overreach of government and their conduct in that environment, and that was a flex of totalitarianism. And they use certain technological aspects to that as well, from like you put your mobile on and we can track where you are, or if there's been anyone. So there was quite a lot of track and trace and a lot of other quite nefarious activities in there that people like me have been warning about, is going to become the norm and more established. So you get occasionally a pullback of the curtain for a few seconds where you get to see what's going on behind. And I would point to the CV19 event as it's got to be an awakener for you. It really does, in terms of things. And it's not even specifically to do with financials, really, on the surface, but it's everything to do with financials in the end.
So is this kind of almost like the the loss in faith in the dollar system is accelerating? Will that happen at the same pace that there's a sudden acceleration in adoption of this viewpoint?
Yes. So we've gone from the fringe to semi-mainstream now.
Mm.
In that we said the bond market is over in 2020. No one was talking about that. We listened to people on X, buy bonds, wear diamonds, buy the dip. It's the best market. It never lets you down. The 60/40 portfolio only started to be spoken of as being over in the last 2 years. So we were in 2020. Everyone in 21 was, when's the pivot on the rates cuts again? All of this. What you've noticed is you haven't actually got any rate cuts, and you didn't get out of the Fed this year either. And we highlight that to cut rates, people need to understand this is another thing. People
Mm.
expect they can print anytime and they can cut rates anytime. That's both of those are complete delusions. And I'm going to explain why. Because
Yeah.
everybody thinks that. In a normal economic environment, yes. In the environment we are now, when you cut rates, you are actually increasing the value of the debt. There's a seesaw with a fulcrum that pivots like that. When you cut the rates, you on the rates going down, the valuation, see my elbow, goes up
Yeah.
like that, and vice versa. So what you're actually saying is, and I use silly analogies. I also want to be entertaining. I want people to laugh their way through this, not to be bummed out and need antidepressants. I talk about pink Crocs because they're deeply uncool. They're the wrong color, and it's kind of like but they were super fashionable at one point, Crocs generally, and then they're super unfashionable. But I'm not trying to offend the Croc manufacturing company. But imagine I have these oil tankers queuing outside your port, and they are all just stuffed with these rubber pink shoes. And everybody who wants a pair already has a pair, and I'm going, no, 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 have some more. Eventually people will stop. They won't even pay $5 New Zealand for a pair. They just don't want them. And eventually, if you keep bringing them, actually become a deterrent. People will pay you to take them away. You open your cupboard and they're all just falling on your head. They're everywhere. They're in your pool. You'd say, stop already. This is where we are in the debt market. In actual fact, it's a delusion that the debt market is very liquid. It is one of the biggest by market cap. And market cap is a terrible measure because it's the current value of it
Mm.
times by the number. It's the same as shares. You multiply them out. People go, that's a massive market. The debt market is absolutely massive. And I say, okay, go sell China's 850 billion US treasuries over the next 2 weeks. See how you do.
Mm.
What's actually been happening is the Fed already has been providing liquidity for people who were forced sellers or needed to sell. So even at the current interest rates you're at, the Fed has been putting 10 billion a time at the moment to be buyers of the last resort. So there is no real trade. And what typically happens normally in a market where there's no real trade is if there's a desperate seller, he chases the bid stack right the way down.
Yeah.
But they don't allow that in the debt markets. That's why you never have these spontaneous collapses. If you
Oh.
were a pension fund and you go, damn, there's no bid. I need to get out of a 10 billion of stock. I haven't got enough yield to pay my pension people. This is what happened with the Californian teachers' pensions, the second largest pension in all of the United States. They put their sell at the price, and there was no one buying it. It's an inactive actual market. There's not a great deal of trade when you're talking about tens of hundreds of billions. And they needed to pay teachers' salaries. And they said, we're not getting any money. We put the bid in, and they're not allowed to chase the stack. If you start chasing the stack down and crashing the bond market, you'll very quickly get a call and say, stop what you're doing, or they'll just delete your order. And they say, what are you doing? What are you doing? You can't crash the market, So it's actually a captured market. It's not that liquid, and it's deemed to have a huge market cap on the basis that's where it traded last. But it didn't trade in any meaningful volume last compared to its market cap. It's a bit like, and I have to use analogies because people can't conceptualize this. It's a bit like Francis releases a Francis crypto scam coin and says, I own 95% of it. I release 5% of it on the Binance if it were going to list me. And then I buy it up from 0.1 cent to $100. And I now declare myself a multi-billionaire. But I'm owning the bulk of the stock, and it's on very thin volume. And apart from a couple of supplier friends that I give that buy and sell, and a couple of bots, I'm not worth that. If I try to sell my 99% into that, the market will just collapse to zero. And that's kind of really where the bond market is. So that Californian Teachers Association was, no, 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 don't sell your bonds. We'll give you a loan against the asset. So that's how they dealt with the problem. So there's
More
not enough
liquidity. Yeah.
to justify it at its current valuation, but we'll treat it as if it is, and we'll give you more credit on the basis of that's a high value asset. Work with us on the game. You know, it's like the voodoo. It's a bit like if you then you had a few thousand of my crypto scam coin and you wanted to sell it, and I said, no, 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 don't sell it. We'll do an OTC deal and I'll buy them back off you. On it. Don't try sell that in the open market. We don't want some true price discovery to take place. You know,
Yeah. Yeah.
that would be terrible. Everyone will find out it's worthless. Just with your 10,000, there's not enough bid. So I'll take
Yeah.
them off. I'll let you go out. Let me do it. Or I'll give you a loan. What do you need? Keep your 10,000 and I'll pretend it's worth what it is, and I'll lend you the money so you can go buy your sports car or whatever it is you wanted to do. So you've got to see this. It's Ponzi-onomics, actually. So this is a charade. This is the key things where we differ from everyone. It's orchestrated. It's deeply understood at the highest level. It's not incompetence. It's intent. It's a controlled demolition because it's how they end a particular stage in our history to start a new one, which now has the technology, the AI, and the robotics to bring about a different kind of society now that they have the technology to do that. And they can start doing, they can start captivating, all your activity, monetizing your data, restricting your movement, all the other things that they've wanted to do. So these are supremacists of a technological, communistic, Bolshevik communism with technology, with a corporate fascist group that they've developed. In other words, Microsoft, all these unicorns that have had special bottomless overdrafts to develop for decades. Think of Amazon as one example. These are funded giants that work with the state and the military industrial complex. They're the servers of it. And I'm afraid you have to look at the reset sniper to truly understand everything. I get a lot of people that are in the financial realm. They see our calls financially, they love them. They see what we've called on crypto and its role, and they love them. They just can't conceptualize the fact that there's orchestration. Then you get people who totally see orchestration, but they don't have the techniques for the markets, timing, how to build wealth, and how you can play this, because there are huge opportunities. You mentioned, it's a doomer profile. There's great opportunities for building wealth in collapses because other things go up. The collapses can be shorted. There are opportunities aplenty. In fact, the Chinese phrase for crisis has a dual meaning. It's crisis and opportunity. So you've just got to decide, are you going to exploit the opportunity that the orchestrators are going to provide you? I'm in the camp, I can't stop this as a little guy with his internet connection and his YouTube channel, but I can seize the opportunity that this process is presenting. There's nothing doomer about that. There's going to be a polarization of the wealth by those that understood what's being brought about and those that were that fell victim, that were ostriches with their heads in the ground. Everybody is responsible for their own financial standing and should see the fullness of what is coming and should prepare for an eventuality that is not typical. This is economic case history that comes around every 300, 400 years. And this one will be on a more grand scale than any one that's gone before it. We just happen to live in these times, and you were chosen to live in these times. So you can get doomed out by it and take Prozac, or you can take cold water plunges, swim in the cold sea where I do, ride mountain bikes, motorcycles, get fat and rich, or get healthy and rich, look after people, and be a principled person in a time of great interest. And that's the Chinese curse. We've been born in interesting times. And I know where I stand. So I don't actually think it's doomer. It's realist, it's full analysis, it's understanding, and it's finding a beautiful life within crisis times. And, every generation has had crisis times.
So you kind of alluded to this fascist technocracy. That kind of ties together a few things, digital currencies, CBDCs, and all that sort of stuff. But before we get into that, I wouldn't mind just going through more the precious metals side, because I can kind of see that there are some assets that you probably want to use not just as speculative vehicles to get rich from the crisis, but is probably more about wealth preservation to get you through a crisis. And hey, if there's any harm in doing it, what kind of harm can come about from actually just holding gold anyway, even if this is just a couple of nut jobs talking on the internet. But if if we were to look at what's happening with gold, what I was quite fascinated by recently was the reclassification of gold as a tier one asset and the impact that that had on treasuries. Now, I don't know if that's a big picture in your thesis or not, but is that, does that explain why we've had such a shift? Well, why central banks have been gobbling up gold in your view, and why the price has been running up significantly? Or do you think the reason why gold has been running up is because people are starting to cotton on to what you're talking about here?
It's a substitution of what once was a 40-year reserve asset for something that has been a millennial preservation reserve asset for beyond the last 12,000 years, in my take. And that's what we're seeing, a substitution. So every bad moment for the debt markets is a good moment for gold. And I've shown this technically. In fact, at peak Trump tariff tantrum, where, and this is a key moment, and we predicted this moment too. So we've made a lot of calls that are already showing this is the key thing. And it's not to brag, it's to say, are we still in alignment with our thesis? We keep pinging, basically, and getting a ping back. And if we get a different ping back, then we adjust. That's the process of, so I make calls where I'm quite happy to be wrong and have the YouTube comment section puke all over me, and it's all good. And we make, and it's part of staying on track. It's the tracker saying we're still on the track. It's just a process for me, and I make them publicly so that I get the feedback publicly. And we said what happened for Liz Truss and Kwasi Kwarteng in the UK is going to happen for America. That was September of 2022. They had a bond market crash that actually crashed the pound and spiked the rates. So what actually happened is money left the UK. It was a loss of confidence. Basically, the Bank of England wasn't pumping up rates as fast as America. And then at the same time, Kwasi Kwarteng and Liz Truss did a stimulus budget, which was extending tax breaks. That meant more debt would have to be interest. They were going to run a deeper overdraft, basically, which was a growth-based economy. And the bond market balked at that. Too many new gilts to come down the line. That's what they call them in Britain, for their gold edge certificate. That's the only part of it that's golden in my view, the paint. But anyway, let's leave that one aside. And what ended up happening is the bond market said, you're going to up the supply, we're going to drop in value. There's the simple thing, scarcity, value. They are not synonymous. Hence my pink Crocs, the queue of oil tankers with tons of the stuff that just aren't valuable. I'll pay you to take them away. And what ends up happening is the currency collapse because the rates spiked. But normally when you get a rate spike, the currency gains. And we said that window that did for those two politicians is going to come, the flash of that window is going to come for America because it's a natural microcosm of an event that America needs. Trump, peak tariff tantrum. What happened when he was threatening China and all of this? Boom, people dumped American-based assets. America is incredibly reliant on foreign money buying its stock market. You look at the market caps of the American market versus all the others. It's massive, and then the rest are tiny. And same for the bond markets, same for everything else. So what suddenly happened is, you're going isolationist because he was picking a fight with Europe, he was picking a fight with China. Okay, cool. You're no longer a friendly place to do business. We'll dump your treasuries, interest rates up, dollar should have climbed, dollar collapsed on that. And there was a key moment. And by the way, what ran? Gold surged. Substitution for treasuries, the natural substitution for a failing treasury market is the insurance policy of house burning down. And the fire's already started. And you can still buy insurance. That's the amazing thing. And that's what went down. So you actually got that microcosm, and he quickly backed down. Many people don't notice that was America backing down, and it was the financial markets. His financial guys would have told him, You got to stop real fast because
Yeah.
interest rates were climbing and the dollar was dropping. And that's the
Yeah. Yeah.
problem for the milkshake theory guys and all of this scarcity. If you are seeing a collapse contagion that is hegemon based, you see loss of faith in America. What you'll actually see on interest rates, you can't just assume that the climb in interest rates is going to lead to a climbing dollar. Because if it is flight capital exiting your market, they will sell the treasury, they will sell the MAG 7, but they'll also get the hell out of America. And that will see floods of currency into Swiss franc and, as we highlighted, gold. And gold is an anti dollar trade. In the debt based collapse, which is USD, UST, buying gold is an anti dollar trade. And China is doing that on an epic scale, despite being the largest miner. They're the biggest importer as well.
Okay. Okay. So yeah, like if you can you just take me through some of the technicals now around where we're at with maybe gold first, but I'd also love to hear your views around where we're at with silver currently at all time highs. And I'm having a look at my silver coin here right now, just wondering when it's actually going to be worth something after all these years.
I think good news for you on that. That's why I say I'm not all doom and gloom. So this is the gold chart. I'll take the BLS as in inflation rate
Okay.
at heart. I don't trust it at all, but I would prefer shadow stats. But we'll take that, and I'll highlight to you that in terms of the 80s, we haven't yet met the $800+ high in
Mm,
adjusted for inflation rate statistics. That's up top
interesting.
here.
Right. So we're getting close to it, but we're not quite at the inflation adjusted high from the late 70s, early 80s.
Yeah. And I
Interesting.
will tell you in my take that that is deeply undervaluing the true rate of inflation. As it is designed to do, they don't want you to know the degree to which they're debasing you because it's a tax on you and they don't want you to know that the cost of living hardship they are bringing about, the degree that they're bringing it about to you. So remember,
Yeah.
governments are inherently hiding their great trick. The great trick is inflation is in taxation. And of course, it allows them to fund boondoggles where there's a disproportionate degree of politicians and other self-enrichment, arms dealers, etc., pharmaceutical industrial complex, etc. So this is still really quite early doors. And if you divided that, as I say, by other things, such as the S&P, for example, and if you look at hedge fund holdings, I'll just clean my face up a bit there, you can see how relatively low this is. This is 1937.
Wow.
33, sorry, depression.
So
Uh,
what's this measuring, Francis? Just for those that might be listening and
yes,
not looking at this.
yes, of course. So we are dividing gold by the Dow Jones to see
Okay.
what percentage relative to market cap of the Dow Jones gold holdings are. And this
Okay.
is very early on a turn. You're at
Mm,
chronic lows at the late 90s millennia, turning of the millennia. And that was the 80s,
right.
1.1. So the
Got it.
total market cap of gold was 1.1 times the Dow Jones
Right.
total market cap
Got it.
back then. You're at 8%, 0.08 at the moment.
Yeah. So this is kind of just showing the relative amount of value that's sitting in the Dow Jones compared to gold and how it's starting to turn, basically, right?
Yes, you would have to go up 13 or 14 times to match 1980.
Wow. We're miles off.
Yeah, relative to equities. By the way, don't forget that could also be the Dow Jones going down. That doesn't mean 13 or 14 times just on the gold price.
It's
Uh,
relative. Yeah.
yes, so
Yeah.
this is a relative valuation when you're dividing by it. And I mean,
Sure.
silver is more acute. So I mean, if I throw silver on there and leave it divided by the Dow Jones, you've really just started.
Right. Okay. And so what you're basically saying is that when all of this goes down, we're we're going to see gold run first and then silver later, which makes sense, right? But you've kind of
Yeah.
I haven't seen it like this before, but you're kind of showing it from a different aspect, just how early we potentially are in the cycle. Because I've spoken to other people who have indicated that, yeah, we're definitely at pretty high levels right now with gold, but don't be surprised for a significant pullback. We might even be it. This might be it for the cycle even. But
No,
what I'm seeing here is that the party's just getting started, really.
yeah. So again, you can't find a bigger bull on precious metals than me. And these valuations pointed out. By the way, as I say, half this can be in the Dow Jones losing 50% too
Sure. Sure.
over 5 7 years. And even if it didn't lose 50%, it lost 25%, but the dollar's lost a third in value. The overall buying power of the Dow will have lost over 50%. In other
Got it.
words, if you sold it today, what could you buy? And then in 3 years' time, if we've had a 25% correction, the dollar's also lost 30, and I would measure the dollar against not other fiats, but again against gold.
Right.
Dollar's lost value, etc. By the time you work out the real, there's a lot that gets hid in nominal values.
Right.
You can correct. All of the 70s, for example, were a terrible performance year for stocks, but you kind of went sideways. But what was happening during those 70s, that's over here, you were going largely sideways here. Wasn't so much. There was a period pretty steep down
Hmm.
there to there. But I mean, it's largely sideways, but it's what your dollar did. They were
Hmm.
devaluing the debt. So the dollar buying power was crushed. And even if even if you compare it against other currencies, which you shouldn't, because they have the same issues, the dollar lost a lot against on the Dow on the Dixie. So if I put the Dixie in there,
The dollar index. So it's
yeah,
and it's kind of like a story, I guess, of what's happening with the dollar more so than what, like, if we take gold as money, then that is the reference point, and what this is really telling us is what the dollar is doing, and it's painting the picture of what we were talking about before, where this amortizing credibility is happening, where little by little, then all at once, right?
100%. So here's that 70s again. I want to just bring this through. It's just on the chart.
Yeah.
You can see the
Yeah, I can
dollar
see that. Yeah.
going down, down, and down. And then it started to gain strength, and then you were going. So after the dead decades, and that was Vietnam War, and that was hyper indebtedness. So that's what's happening. So it's called financial repression,
Right.
where they are intentionally destroying an asset, the debt market, devaluing it. And there's two release valves. That's a geyser that's almost getting ready to blow. There's a fire under it, and people are trying to manage releasing some of the pressure that's building in it. And there's two taps. The one tap is let the debt devalue. So that's like the T-bill. That means rate climbs, debt values down.
Hmm.
And the other one is currency devaluation. Ideally, they need to have both open to make sure it doesn't blow up, but they can't have them all both open at the same time, because then it's just contagion. You will have that in the quickening period when we are skidding the spiller, the thriller, all the way from Manila, as I like to say, and you're going near vertical down. So that's the
Got it.
running feet that eventually end up just pitter patter together. And that's contagion, and that's the quickening that you're yet to have, but you're getting the left, right, clear, stamp, 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 and it goes faster and it accelerates. So
Okay.
I'm hoping that just brings, that was, and that was a microcosm. The 70s, the entire late 60s till 1982, when the bull market started,
Yeah.
was financial repression.
Right.
Now you need a far larger, far bigger, and you can't push the rates to what Volcker did. So here's how it's different. I've mentioned how it's similar. Now I tell you how it's different. You can't do that. You can't run rates up to 16, 17%. It's over. So what ends up happening is you're going to have a contagion, a beginning of a collapse, and then I expect them to intervene. I don't think we're going to get to see this all trade zero,
Right.
that it's going to be allowed to fall entirely on the floor. They always jump in and say, "We're here to save you," and then we've got a new system. The old system failed. Capitalism doesn't work. They're going to say, it's time we tried this technological fascist communism. They won't say it like I just said it, of course.
Yeah.
A more equitable society for all. Build back better. You're going to get the word sandwich. You're going to get political spin and deception of great degree. They
Right.
brought this about. They impoverished you. Governments overexpend. Governments are your worst enemy. They are all coordinated. It is designed to enrich a superior, supremacist ruling class, or that's what they think they are, at the expense of the masses and the people. And by the way, robotics and AI, you no longer need the scale of workforce. And you wonder why you had really weird medical interventions that seem to have been largely only bad for you. So it's time to think the unthinkable. Sometimes there are real plans afoot, and it is not all down to incompetence. It's by design.
And I guess that's probably a good place to come in for a landing as well, because whenever you hear someone say they, it's what they want, you got to ask the question, well, who is they, right? And you've kind of alluded to this before, but just so it's abundantly clear, in your view, who are these nefarious characters who are repressing us financially?
It is, there are bloodlines that gets into quite ephemeral topics that are not typically financial of nature. It's right to rule. Go and study the role of money and power. They are almost inextricably intertwined. These people don't seek more money. They have plenty of it. They have more than all of that. What they seek is the ultimate power to aspire, and they're quite ungodly and usually atheistic, but they see themselves as almost gods. That is the right of life and death over others. So eventually you get reduced to a cattle class, to an abattoir owner. And I fear that it's a bit dark, I know, but actually you can dodge a bullet if you're smart. You can dodge quite a few bullets if you're smart and still have a great life.
Yeah.
I'm lucky. There were people that were shot 19 years old getting off one of the landing boats on Normandy. I'm delighted I got to 57 years old, and I intend to make the most of what I have left. I'm very sorry that I'm handing the world over to my daughter in this current state and what kind of existence, but there were too many decisions made many years and decades before we were even born that kept us on this trajectory, and it's only accelerated. So what can you do? Stay
Yes.
positive. It's an obstacle course. Get fit, get healthy, run it. See the joy in every day. Give yourself a lease on life that is 1 year long. And if you execute and live every day, we wake up and have sunrise sessions on the warm side in False Bay here with guys. It's beautiful. We have a coffee, we put our feet in the sand, we ground. There's more to life than
That's
finances
right.
and economics.
Yeah.
And unfortunately, there is civilizations. It's actually a conspiracy theory to think that there wouldn't be a group of people that sought to collaborate for their own gain at the cost of the main.
Yeah.
It's actually a conspiracy theory to think that there isn't that level. Unfortunately, they're quite psychotic. They're quite self-entitled. They've got many generations of trust fund wealth that sees themselves as we're different to other people. I would almost say you want to be on Rumble for that, not YouTube.
Yeah,
The
totally.
key thing about the financial side is
Yeah.
understand what's coming and prepare accordingly. I would also
Yeah.
say, unfortunately, going with that is great social unrest. The people that haven't planned are going to be food level hungry. And when you can't eat, that's when people get violent. It's very useful for overthrows and for suppression. It's divide and conquer tactics. So those that did plan will be hated by the government and by the people who didn't. And that's your big concern. Media will be massed against you. It will be like the unvaccinated. You will be for not voluntarily putting yourself into a reduced lifespan, now the unvaccinated classes, and you'll be reviled. And they will have taxes on capital gains, unrealized capital gains, real-time taxation. Governments are going to go into scavenge mode because the social contracts with the collapse of the debt market. Remember, their funding mechanism is the ability to run a debt market and to overspend. With the collapse of that, which has been synchronized globally, everybody's going to have to cut their clothes according to their cloth. And this government ain't used to doing it. So they're going to renege on services. Private security will become the thing. You're going to have less police cars, less police. You're going to have more angry people at the same time. Civil unrest. Unfortunately, on that side, that is doomer. But it's also logical. It's rational. So in this country,
And
I'm armed up.
planetarium. Yeah.
Yeah.
Well, yeah, I want to ask you about that because, and you kind of speak to what's happening in Australia right now with Division 296, where there's a 15% tax being proposed on unrealized gains. So, yeah, like this, what you're saying is not theoretical. We're seeing this in action. And I think you could talk to anybody just around how it kind of feels like crime generally is on the rise. The potholes are getting worse, and it feels like we're getting less value out of our tax dollars. So I think not too many people will argue around that, and maybe they think it's just temporary. But what are you doing personally as we come in for a landing? What are you doing personally to hedge yourself, not just from a portfolio perspective and from a health perspective, but geographically? Because I know I'm talking to you in South Africa, but we were talking before we hit record. That's not the only place you live. So how do you deal with that, and what's your strategy there?
Uh, I don't think, first of all, that I have a perfect solution. I expect 75% of my plans in some form to fail. You've got to remember, these people have game theoried this. They have media, they have intelligence services, they have an unlimited budget because they use your tax money to fund these dark plans, the Palantirs of this world and all of that. So I would, it's especially talking to a New Zealander-based audience. There's commonalities with the South Africans. I think it's why they're both great rugby-playing nations. Polynesians have got great genes for muscularity and physicality, but just even the Bowden Barretts of this world, the Barrett family, they're not Polynesian. Cuddle up to your farmer. Raw milk, real food, supply chain. You want to make sure you have food supply chain. That inherently also implies getting more rural. Um, Cities are not going to be a good place. In South Africa, townships wouldn't be a good place. The poor areas, you want to be far away from them if you're in New Zealand. I'm not as good on the geography of New Zealand. I know about North and South Island, obviously, but I wouldn't be in the 11th floor of a high-rise apartment in Auckland Central. Particularly if it's in a graying area of mixed wealth brackets. I would prefer to be South Island, maybe, with the farmers and in a 4x4 with a little plot of land and largely community-based, very on the ground, not overly policed, but well community known. So secure through familiarity and good supply to natural supply chain of food. I do actually think, if you look at the Bolshevik revolutions and every other revolution, starvation and hunger have actually played a game. And there has been an attack vector brought about on farming in Holland, South Africa, many other places. So without doubt, controlling the masses, controlling the food supply is still a tactic that they intend to use. And there are patterns that have occurred in previous such instances. And if you have a look at all of these, they tend to follow those patterns and they will use the same strings to pull on because it's almost their MO, modus operandi.
Yeah.
So I would certainly position, if I was in New Zealand or in Oz, I would be close to good farmers. I would know them personally. I would make friends with my local policemen and ensure that they know the difference between getting a government salary and representing the people, and at what point of the line they are crossing. Because there's too many people that will say, I did it because I was ordered to. You've got coppers in Australia beating up girls on park benches because they were, outdoors when they shouldn't have been, or didn't agree to be vaccinated and things like that. I do treat the CV-19 as a real stress test of compliance. The people that put pressure on you to comply during that period are the same people that will be putting pressure on you during the next period. Do not associate with them. Go with the free thinkers. Be in a community of free thinkers and libertarian seekers that are self-directed by wealth development, self-directed by food, energy, and power, and water. So solar panels, rainwater harvesting, these are activities beyond the financial realm that I would say we all need to be more self-reliant. The ability of government to provide anything at a reasonable price, if at all, is going to be reduced, and the supermarket chains are including that. And looting and the martial law, these things could happen anywhere and everywhere. But America is going to be the hardest hit out of all of this as a hegemon. And that's the big cope that I don't see them accepting. But it's going to knock on to everyone. The West is in real trouble. It would be better to have some BRICS or non-Western aligned nations as optionality. So I'll go back to our modus operandi, because we've got to close here. We aim to help people build wealth during this time. There's going to be immense opportunities. However, there's going to be huge counterparty risks involved in trading accounts, investments, etc. We do not encourage over digitalization. Physically held will be the thing that you will still be able to hold, providing you can protect it, and having optionality for freedom from different countries or with different countries. The system, while synchronized and coordinated, there are arbitrage cracks by nation states and legal systems and various other things. And some countries are better than others in certain things than other nations. And if I was a New Zealander and Australian, I'd look at Bali, Indonesia. The demographics are very good there. The money is moving east. It's shown by the gold. And you actually want to be a commodity focused, particularly precious metals, because of the reserve asset nature, not oil right now. The economy is in a recession. But in the longer term, all forms of commodities, including softs. We've been trading cocoa, coffee. This is all symbols of one thing: currency and debt debasement. That's why they're going up, not because of floods and crop failure. Ongoing systemic. The prices are never coming back down. And this is what people have to recognize. You're going to see it in everything you do and everything you buy, to prepare for that. My YouTube channel, The Market Sniper, is all about that. I'm on Twitter under The Market Sniper. We also cover the crypto markets under The Crypto Sniper. And, follow us, have it. And if you ever feel like it, you can book a call. We have a number of New Zealanders, a lot of Aussies in our community, and they are awesome people to have, and they get it. And your governments are the enemy. Let me leave you with that. It's an obstacle course, and survival to thrival is the game. And we aim to help execute that by bringing like-minded people together. And bringing strategies that seriously will help you have that optionality, freedom of movement, and wealth building in what is a serfdom society, which is going to see real polarization. Thanks for having me on. And I don't know if there's any other final questions you might have.
No, that's really appreciate that. So The Market Sniper on YouTube, and that's where people can go to learn more, and obviously The Crypto Sniper as well. So yeah, thank you again, Francis. Really appreciate your time tonight.
Absolute pleasure. Absolute pleasure. I look forward to doing it again sometime.
Cool. Thank you.